Hi, welcome to 50 and Starting a Business. Today we're going to talk about the 7 ways that you can get funding for your business. One way that I was looking into, which doesn't really work, is for me at least, is getting an SBA grant. So I'm not really going to address that. If you are interested in trying to get a grant, go to the Small Business Administration website. Grants are mainly for scientific research and some technology, which my businesses are not about. So the other more traditional ways that most companies can get finances. So there are 7. So one is, I don't know, came up on my list, but bootstrapping. So that's what I do. That's what I've done with all of my businesses. So bootstrapping is when you just fund it from your personal account. So when I started my Etsy shop, I got an embroidery machine as a gift. And then I just used my personal money, kind of stopped going out to lunches with friends and got some fabric and some thread. I didn't stop altogether. I just curtailed it. But I went out and was able to buy thread and fabric. And then as I was making money, I invested the money back into the business. So bootstrapping is probably the best way to do it. You keep all ownership. You're not taking out loans or debts. You have no pressure of making a certain amount of money so you can pay back credit cards or loans from family members or what have you. So number 2 are loans from family members and friends. To me, that would probably be like the most stressful way of doing business because I would feel so, beholden to make sure that they're getting their money back as soon as possible. Number 3 is credit cards. I would probably choose that over loans from friends and family. It's not the smartest way to do it because credit cards have very high interest rates, but it's easy to get that money pretty quickly. I probably definitely use credit cards to buy a machine, but then I had the money to pay back, to pay off the credit card as the money came in. But you don't have to worry about letting a friend or family member down or losing all their money or what have you. If you build out your business intelligently, slowly, I shouldn't even say that. I think some businesses require a lot of capital upfront. So it doesn't matter how smart you are. If you're in a business that requires big machinery or capital equipment, you're going to need to have a loan or hopefully have enough money saved up before you even start to do that. But there are instances when you need to borrow money from friends and family, but be very careful about that. Number 4 sounds like the best option to me out of all the options, but that's crowdfunding. Go to those crowdfunding sites. I mean, depending on what you're doing, I think for me to be like, hey, crowdfunding, I'm starting a YouTube channel. Please finance me. I know I'm going to be successful, which I do know I'm going to be successful. That's the way I'm looking at this. But I don't necessarily know that people on a crowdfunding site are going to want to come together to finance a YouTube channel. Number 5 are bank loans. Bank loans are going to be cheaper than financing through credit card. Banks are going to want to see your personal history, your personal financial history, your FICO score, especially if it's a new business, because the new business doesn't really have any track record with that. So you're going to need to sit down and probably co-sign the loan for the company's bank loan. Number 6 are angel investors. So angel investors is really just a nice way of saying a very high net worth person that is going to come in and they're going to want equity of your business. Usually it's a pretty substantial amount. And they're going to take shares. So they believe in you. They believe in your idea. They're going to take, give you $1 million for a 20% cut. That's really what you see on Shark Tank. Those 5 individuals on Shark Tank are acting as angel investors. And if you've ever watched that show, they want to, people will come in and be like, we want $100,000 for a 10% stake. And the next is like Mark Cuban's like, I'll give you $5,000 for a 20% stake. And you're just like, it's crazy. Now, some of the people are wishful thinking for what their business is worth, which is how they come up with these numbers. But an angel investor is going to want to take a substantial for probably giving you less money than what you want. But that's a nice way to work. And then and that's usually angel investors come in at the very beginning rounds of a company growing. The last option is venture capital. And you've heard of venture capital. You probably have heard of venture capital. But venture capital acts kind of like a mutual fund. So usually a venture capital firm has lots of people have put money into their fund. And then you have the managers or the people that work at the fund go and research and do their due diligence. And they decide how this money is invested. So it's not necessarily the person whose money it actually is is deciding on investing in the business or not. It's these venture capitalists who have a track record of picking great companies to invest in. So those are the 7 ways to get funding for your business. And just to run through them, bootstrapping is just you doing it on your own. You can get loans from friends and family, credit cards. The easiest way probably, other than bootstrapping, credit cards is probably the easiest and fastest way to get funding. 4 are crowdfunding sites, which I haven't used one, haven't really looked into it, but that would be an interesting thing to see if you can kind of get crowdfunding for your business venture. Bank loans, definitely going to be a cheaper option than credit cards. Angel investors, definitely if you have like technology or something that's really going to take off, is a great way to go. And then venture capital. So thank you so much for watching my video. Have a nice day.